Good afternoon and welcome to the Wealth of Advice Market Update on the 30th of May 2020. Another week passes as we go through this coronavirus epidemic. However, we are now moving into what might become the new kind of normal for the next few months. Boris Johnson confirmed on Thursday night that the first main phase of lockdown as we knew it is now coming to an end. So from next week, more businesses are going to open, schools will reopen. Some schools are going to reopen on Monday, as I say, various businesses, with the rest, I think, open on the 15th of June. The market's like that. There was definite sort of increase. The FTSE 100 got up above 6,200 before falling back again a little bit on Friday due to stuff going on in America, which we'll come on to. So what could have been a positive week for the government was clearly overshadowed by what we've got next there, where Durham and Barnard Castle was in the news for all the reasons it didn't want to be because of what one guy decided to travel up from London to isolate in his parents' property in Durham and then go for a day out in Barnard Castle, which the police have said was probably against the rules, but nothing's happened. So there's been a whole week of political stories about that, which has overshadowed what a lot of the other more important news I felt that was going on. The contact tracing system went live, which we hope is going to become very important to keep a lid on the virus to try and stop second outbreaks reappearing and causing big problems. The markets don't want a huge sort of second wave of the virus, which could shut down businesses again in the future. Hopefully now we see businesses coming back online, albeit working in different fashion than what they've done previously, more shifts, more people working separate from each other. Then, as I say, if that can work, then there's no reason why markets won't continue to go up. The Chancellor yesterday went through and explained how the furlough scheme will remain likely to be till around about October, but from August onwards, the amount that the government pays compared to the employer will change. It'll be interesting to see how many employers foot the bill that the government is expecting or hoping they will, rather than sort of put it on employees that you'll start earning less. I don't know how many sort of people will be going back to work during the month of June. That'll be an interesting thing to look at, to see how many people remain on the furlough scheme. But most businesses, or a lot of businesses, are certainly getting to the point where it's now going to be crucial in the next few weeks that they will have to return to some kind of normality and get trading again. The Premier League is a good example of that, where they had conditions imposed on them that if they didn't complete the season by a certain point, then they would have to pay a lot of money back to the television companies. So Premier League football returns on the 17th of June, which might please a lot of people. I know my wife is really looking forward to it. She's going to watch every single match, she tells me. I've seen about 10 minutes of that German football play behind closed doors, and for me, football without fans is just it's just ghost football. It shouldn't be happening. In my opinion, the Premier League should have been null and voided just to avoid Liverpool winning the league title, obviously. News from around the world. China and America, their war of words continues. It's not good for sort of world trade in general that the two biggest economies are arguing with each other. But you're now starting to see Trump maybe using this war of words with China to sort of blame them for the coronavirus starting at the first place. That's what affected the markets on Friday. There was a belief that Trump was going to worsen conditions between the two countries, and he has actually said he's going to terminate all US funding in the World Health Organization. That's massive in itself, and you can see that this bad blood between them is not going to get better anytime soon. The other news story, which has totally engulfed the US in the last couple of days, was the murder of George Floyd in Minneapolis. Looked at the TV this morning, you see some quite shocking scenes of all the looting and such like that's going on in that city, but it's starting to spread across the US. So you've got record unemployment, you've got a virus which has killed over 100,000 people in that country, and as I say, the racism element to sort of what the police have done to murder that guy which if you've seen the videos of it, it's absolutely horrendous. You just wonder where that's going to end and what that might do to an already fragile US sort of situation. A lot of the US states were trying to reopen, get their businesses moving again. New York, which was their epicenter of the virus, is put a plan in place to start its own reopening, which is good. New York is absolutely huge, the whole state of New York. So it was good to see that they were doing it right. Other states, there was a big worry that they were perhaps doing it too soon. And you just wonder sort of what will happen with all this rioting and such like that's going on across the country. And as I say, if you've got so many millions of people unemployed who are not going to work on a daily basis, but on a night they want to go out and burn and smash things up, you just wonder, is this going to be sort of one of the biggest incidents that you've seen in America in the last sort of 40, 50 years, certainly since the civil rights movements in the 60s. So definitely worth keeping an eye on. And again, something that just come out of left field could affect the markets, and that wouldn't be good. Smaller stories that sometimes are slipping through the net now because of what's going on. In America and in the UK, Egypt announced their healthcare system this week, they believe, is at the point of collapse due to the number of coronavirus cases they've got there. So that's parts of Africa which is not sort of coping well with this, and you just wonder what's going to happen in certain economies and places like that. We mentioned previously that Latin America was becoming really affected by it. The World Health Organization has said that Latin America is now the new epicenter for the coronavirus. In a previous update, we said about Argentina previously defaulting on their debt. They did it again last weekend. So what's going to happen in perhaps maybe the poorer parts of the world, Latin America, parts of Asia, parts of Africa, may sort of keep the world economy from growing what we would like to get back to normal, certainly longer than maybe what certain parts of Europe and maybe parts of the US will do. So we've got to keep a close eye on that. Last week we didn't have any updates from any particular fund management groups, which was the first time since this all sort of really kicked off at the end of February and the first week of March. However, on Tuesday, we've got a direct call in. It's going to be one of these Zoom video meetings with the fund manager from T. Rowe Price, who is part of their US fund management team. And it's quite acute that we're going to have sort of one-to-one access to him. So we're going to ask him lots of questions about, I mean, we had things lined up to ask him before all this has kicked off in the US this week. So hopefully next week we're going to share some of the sort of the notes and the sort of the direct comments that this guy is going to make. So hopefully next week we'll have a lot more meat to put to sort of some of these issues for you. One of the points that I raised on last week's update was the fact that the index, which measures sort of risk in markets, is coming back down to a more normal level, if you like. As you can see there, the world started off in 2020 in quite a nice sort of phase. If you remember, it seems a lifetime ago, markets were increasing all the way to mid-February. And as what sometimes happens, I go on holiday. I did the first of my 20 half marathons for the charity that I was intending to do. I went away the last week of February to do that first half marathon. And as you can see on that graph there, all hell broke loose. The index of risk just went off the scale, up 500% from where it was end of February into the end of, or the middle of March. The markets absolutely tanked through March. By the end of March, the portfolios that we manage, we will come on and show, were down around about 20%. But you can see from that mid-March peak where risk was 500% higher than what it was in January, it's come right the way down. It has spiked, as you can see, just before the year there, a little bit in the last couple of days. But genuinely, we are pleased that the trend on that line is the one that's going down. What would cause it to go back up? Well, clearly the US and China falling out with each other and that ratcheting up what's going on in the States right now, the rioting and such. I'm not sure that's going to cause that much for markets if the police and the authorities can get it under control in the next few days. If there was a second outbreak or a really major outbreak of the virus across Europe, UK, Asia, Europe, then you may see that increase. But definitely positive that the level of risk that our clients face has come down. So on the point of fund performance, these two sort of model portfolios, which we've used as an example tool all the way through, the Risk Score 2 portfolio, just to remind people, has roughly 40% invested in the stock market. Risk Score 3 is up to 60% in the stock market. And what you're starting to see now is the Risk Score 3 is within sort of touching distance of Risk Score 2, and that's showing you that the stock market is now rising back and it is bouncing back nicely. So May has been a very good month for clients' investments. At the beginning of the month, the funds were around about 90,000 and 91,000. And as I say, so someone who had £100,000 invested mid-February in Risk Score 2 is now got roughly £95,019. And someone who had £100,000 invested in Risk Score 3 in mid-February went down to 79,959 at its worst point, so over 20% down, and it's now back to 94,643. So around about a 5% reduction on the falls from the end of February. Again, I was doing a client review for somebody on Friday. The annual review documents were prepared, and that person in Risk Score 3 over 12 months was actually positive by 1.89%. So it depends how you look at the data and what you sort of want to analyse. Definitely someone who's only been an investor for a few months has still sort of got a bloody nose in the sense of you've gone in January, February and the markets have fallen. But the longer term investors are now starting to see funds come back up, and over the long run there's definitely positive performances there. So how far are we away from getting back above par where we were back in February? Well, I still think there's quite a way to go. I think that the markets are running ahead of themselves. The markets are always pricing in what they believe to be future news, and they think that because businesses are getting back to work and the economy's starting to move again, that's a positive. Obviously, a pullback on that would be if there was a huge increase in the infection rates or other matters which we mentioned a couple of times sort of escalate. So it's definitely fragile times and it's worth keeping an eye on, but we're confident that this is certainly going to continue. Just looking at actual stock markets in general during the month of May, the Nikkei, which is the Japanese index, that's up 11.5% in the month. The German index up over 10%, the American index up over 9%. FTSE All-Share, the worst of them four listed there, still up over 5.8% for 1 month, which is good. And again, if the UK can press ahead in its Brexit negotiations, and if we don't have a second wave of the virus and people can start getting back to work through the month of June and shops start reopening on the 15th of June, and then Boris will make another announcement in 3 weeks, if that's all positive, then there's no reason why our index can't become one of the better performing ones as we get through this. There was always that saying, if you like, that the Asian economies were going to be ahead of us because they had the effect of the virus sooner. Germany locked down a lot sooner than us. They had the contact tracing service in force a lot better than us. They've got better testing apparently. So that's probably why their market's not done so well. The Hang Seng Index, which is the Hong Kong market, down 6% over the month, and that's clearly because of what has happened there with China imposing martial law, and that's a very worrying aspect of what's going on in world politics. The UK government, we understand, is going to say to 300,000 people who live in Hong Kong that you're welcome to come and move to the UK. That would be sort of very interesting if that were to happen, because then Hong Kong, as we knew it, would probably be no more just another part of mainland China, which is what China we think probably wants. So overall, the month of May was very positive for clients' investments. Certainly feels a bit better. The weather's nice. People seem to be out and about a little bit more. You're passing shops, you're seeing good queues of people. People seem to be understanding what they need to do and how they're adjusting. So hopefully this new kind of normal is not such a bad way of living for the next few months. And as I say, if the market's like it, then hopefully we'll be back next week and beyond with more positive updates again. So thank you for listening. As I say, we'll be back in touch next week.